Time now for call of the day. Tesla. It's a growth company with no growth. That's according to Wells Fargo analyst Collin Langan. He's downgrading the stock today from equal weight to underweight. But on the flip side, Wedbush's Dan Ives, a staunch defender, he says the negative noise on the street is overblown. Let's bring in our senior autos reporter, Pras Subramanian, for more. Collin has been tepid on the stock for quite some time. But tepid is not underweight, right? And so it's pretty dramatic here that he's downgrading the stock.
Yeah, I think that headline sort of says it all. The growth, company with no growth. It's kind of highlighting the concern on Wall Street we've seen recently for Tesla. He's warning in particular that cutting prices to boost sales isn't working, noting that sales were only up 3% in the back half of 2023, whereas prices were cut by 5%. So he's kind of concerned there. Tesla itself warned about their growth prospects, saying that they see significant sort of deceleration there. Most analysts think it'll be around 20% for this year. We'll see, maybe less, but we've seen this story before, right? Where the bears sort of got going here in Tesla, and then they were burned. We'll see if Musk can kind of pull a rabbit out of a hat here. But long term, I think you mentioned Dan Ives. I think people like Dan Ives, even Adam Jonas at Morgan Stanley, say that this is more of a long term play. Look to 2025, even 2026 for a return of that growth. The question is, how long can investors last here when the Mag 7 stocks or the rest of them are kind of taking off, or at least doing better than Tesla?
Yeah. Bloomberg pointed out, by the way, shares of bullish ratings on this name now back to the lows we haven't seen since April 2021. So it's pretty impressive, just the sentiment on the name. It wasn't all bad news, though, right, Pras? There was actually some good news for Tesla today out of Berlin, I think.
Right, restarting that production there. I mean, look, it was bad news when it stopped because of that sort of protest and potential vandalism of like a power substation nearby. But good news that they're back to sort of, I think, not sure if they're at full capacity again, but it takes a while to ramp up. But they were making around 4,000 to 6,000 Model Ys a week there, so that's a significant amount of cars.
That feels less like good news and more like the removal of bad news. You know what I mean? Less like a forward, sort of pushing development forward. One other headline that caught our eye today is that market cap-wise, Tesla's now fallen below JP Morgan in terms of its market cap. So to your point about the analyst coverage going down, and to your point about sort of trying to time these things, which is notoriously difficult. But it is interesting that we seem to have reached this nadir of sentiment around Tesla, but maybe it could get worse. I don't know.
Yeah, I mean, look, the stock is still sort of richly valued compared to other automakers, but again, you're betting on that long-term growth. You're betting on that sort of they don't have the legacy costs of a lot of these other automakers to go full EV. But the question now is, we saw Adam Jonas again with the note today talking about how it's bigger companies that are actually kind of dialing back their EV sort of game plan, dialing back their capital spending, being more sort of thoughtful about that spending, and he upgraded the entire sector. So there's this. What are you looking for now? You want more near-term growth or long-term growth? I think that's the bet right now.
That's a good question.
Pras, thank you so much for joining us. Appreciate it.